Microsoft stock, ticker symbol MSFT. Is this the best dividend growth stock to buy right now? Microsoft stock is down almost 24% year to date, which is quite a lot, to the S&P 500, which is down 18%, so that's quite interesting. But does this mean that at current valuation MSFT stock is a buy? In this video I'm going to show you real quickly what Microsoft does, the historical returns, the fundamental analysis, dividends, some competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Microsoft do? Microsoft develops and licenses consumer and enterprise software. It is known for its Windows operating system and Office productivity suite. The company has three broad segments: productivity and business processes such as Microsoft Office, Office 365, SharePoint, Skype, and LinkedIn, and so on. The second one is intelligence cloud, such as Azure, Windows Server OS, and SQL Server. And the third one is more personal computing, such as Xbox, Bing advertising, and desktop. When we check the latest earnings, we see that Microsoft had a miss on EPS and a miss on revenue. So the question is, what happened and what does this mean for the future of this company? Overall, Microsoft reported a 12% growth year over year. Intelligent cloud grew the most with 20%, while more personal computing only grew 2%. Gross margin grew 10%, or a minus 1% in gross margin percentage, which makes sense because the revenue grew at 12% and gross margin at 10%. Microsoft said there were some impactful events, such as the foreign exchange rate, which makes sense, and of course the lockdowns in China, and the impact of Ukraine. So it seems all to be very short-term impactful reasons, and not so much about the long term. So to me it feels that the things will be alright over a longer period of time for Microsoft. I think that's very interesting is the fact that cloud revenue is growing in high amounts, 20% year over year, as we saw earlier in this video. On top of that, the gross margin is really high at 70%. So when this segment becomes bigger and bigger, the margins of Microsoft will go up eventually. So I really like this part. And now that we know more about Microsoft and the recent earnings, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark. And since it's very difficult to name a competitor that's doing basically the same as Microsoft, I decided to include Oracle, Google, and Apple as well, since all these companies have similarities. First of all companies did outperform the S&P 500 big time, except for Oracle. Microsoft returned at 270% in the past 5 years, including dividends, versus the S&P 500 at 74%, so that's a big difference. Oracle returned only 59%, while Google is at 129% and Apple is at 305% on top of this list. On the 1 year chart, Microsoft returned a minus 40% and the S&P 500 is at minus 12%. Oracle is at minus 15%, Google at minus 24%, and Apple is the only one with a positive return. On the 6-month chart, Microsoft is at minus 14% again. The S&P 500 is at minus 9%, Oracle at minus 3%, Google at minus 19%, and Apple at minus 6%. So all stocks had a negative return on the 6-month chart. On the 1-month chart, all the stocks had a negative return as well. Microsoft is at minus 6%, the S&P 500 at minus 3%, Oracle at minus 2%, Google at minus 6%, and Apple at minus 2%. So with Microsoft being down a lot year to date, does it mean that it is a buy right now? Let's find out by checking the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Microsoft is a 1.9 trillion market cap company with a PE ratio of 26, which means you pay a premium for this stock. Later in this video we will check the 3 price targets that I created using the Everything Money software to see at what price I'm going to buy Microsoft. The 12th trailing month revenue is at 198 billion, which is an insane amount of money. And in this graph we see that revenue went up really nice and steady. And even for a company this big, they are growing in high amounts. Since late 2017, Microsoft is growing in double digits, which is pretty insane when you are this big. Net income is at 72 billion, which gives us a profit margin of 36.7%, which is significantly higher than the 5-year average, so I do like this a lot. Margins are increasing, and this is also driven by the fact that the higher margin segment, cloud, is growing in high amounts. Another great thing about this company is the fact that the upcoming numbers are pretty high. Return on assets is at 30.7%, which is very nice and also above my 10% minimum. And it's the same story for the return on equity, which is at 45%. The most important number here, return on invested capital, is at 24.7%, which is also very high. And the thing that I do like the most here is that it's also significantly higher than the 5-year average, meaning Microsoft knows how to invest the money. A really important thing with big companies is the current debt level. Microsoft has 78 billion in debt, which is of course a lot of money. But Microsoft has 104 billion in cash and 89 billion in operating cash flow, meaning they can easily pay down all of the debt and still have money left. So this also is something that I really like about this company. They have so much cash available. And with all this cash, they can do different things, such as pay down debt of course, but also buy back shares, do acquisitions, pay dividends or research and development. So it's very important that free cash flow is growing. And in this graph we see that it's growing quite nice and steady, especially since 2015, so I do like this a lot. Microsoft also buys back a small amount of shares, which is a good thing. You don't want them to buy back big amounts of shares when the stock is at a premium price. You want them to buy back shares when it's massively undervalued. So with a buyback percentage of 3% in the past 5 years, I'm pretty happy. They buy back a small portion of the shares outstanding, so that PE ratio goes down a tiny bit, because the EPS is going up. Basically, it means that you own more of the company in ratio versus 5 years ago, which is a good thing of course. Another thing that companies do with free cash flow is paying dividends. Microsoft pays a 0.97% dividend yield, which isn't the highest of course, but it's all about the dividend growth. Payout ratio is at 26%, which is pretty low. So to me it would be nice if they increase the dividends in higher amounts, because payout ratio is really low and it doesn't make sense to buy back a big amount of shares when it's at this price. So this could be a great way to return value to the investor. So I would prefer dividends a bit higher. The 5-year growth rate is at 9.7%, which is pretty good. But again, I prefer a higher number here. They grew the dividends for 70 years in a row, which is pretty impressive. Next up are the fundamentals of Microsoft versus some competitors. Again, I decided to include Oracle, Alphabet, or Google if you prefer, and Apple. Microsoft has the highest PE ratio, which means that other companies are cheaper. So to me, Oracle and Google are the winner here, since they are significantly lower. Microsoft has the second highest revenue compound annual growth rate, and also the second highest net income compound annual growth rate. Google is on top of this list, and also with the free cash flow growth. So Google is the winner here. But to be honest, Microsoft did great with a revenue compound annual growth rate of 15% over the past 5 years. Oracle has the highest gross margin, but Microsoft has the highest net income margin and also the highest free cash flow margin. Microsoft also has the second highest return on total capital. Apple has the highest. Overall, Microsoft is the winner to me. Microsoft and Google are both capable of paying down all their debt, so to me they are the winner here. Oracle has the highest dividend yield, but Apple has the lowest payout ratio. Oracle has the highest dividend growth rate, but Microsoft has the longest streak in growing the dividends. Overall, I think Microsoft did very well and in most cases was in the top 2 of this list, so that comforts me a lot. But this doesn't mean that you should buy the stock immediately. Let's find out what the low, mid and high price targets are for Microsoft using the Everything Money software, which is one of the best tools out there. I need to fill in a few key numbers based on a low, mid and high assumption, starting off with the revenue growth. As told earlier in this video, Microsoft is growing in double digits, which is insane for a company this big. But still, I think things will start to slow down. So I'm filling in 10, 11 and 12% for the revenue growth. Profit margins are increasing over a longer period of time, so I expect that it will either stay at current levels or a small increase. So I fill in 32, 35 and 38%. Basically the same goes for free cash flow margin. So I'm filling in 31, 32.5 and 34%. PE ratio is at 26 right now, which means you pay a premium for this stock. There are people saying that you should pay a 15 PE ratio for a company this big. And there are also people saying that you should pay a 25 to 30 PE ratio, since it's growing in high amounts. I decided to aim for a PE ratio of 20, 21 and 22. I don't want to overpay for this company, but I do want to pay for the growth and also because of the cash position, which is really good, and which can contribute to a high return for the investor. And it's the same story with the price to free cash flow. For the desired annual return, I'm filling in 12.5%, since I can get an easy 10% average return with owning an ETF. Right now, Microsoft stock is at $256 a share as of recording this video. I hit analyze, and we do see some green numbers. We have a low price target of $203 to $209, which is quite a big drop from where they are right now. We have a mid-price target of $237 to $255, which is around the current valuation. And we have a high price target of $276 to $309. So if you believe these high numbers, then Microsoft stock is a buy. To me, the mid to high price target seems to be the most justified here, which means a price target of $237 to $309, which is quite a big range to be honest. My final conclusion on this stock is that I really like the business and almost every part of the stock as well. They are still growing in double digits, which is insane for a company this big. They can also easily pay down all of the debt and dividends are growing at a decent pace. Right now, Microsoft is one of the bigger positions in my portfolio, but I hope this stock will fall down even more. I think the price range of $237 to $309 is the most justified here, so it would be great if it drops to $200, so you have a higher potential and also a bigger margin of safety. For now, I'm still bullish on the stock, and whenever it dips, I think I will add more shares to my portfolio. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.